2023 has been one of the biggest years in this cycle. It has been a transition year from a bear to a bull, and unfortunately, the majority have missed it. But what we've been covering here on the channel is, of course, the massive bull market going on in Bitcoin, the huge bull market going on in the Dow Jones, the S&P, and of course, real estate as well, as this is your home of macro cycle analysis, studying the past to forecast the future. And we've got a massive 2024 coming up for you guys as well. So don't go anywhere, hit the like and subscribe button. You know the drill here. Let's kick it off with something that is about to close in the next few days. We have the monthly closes on the US stock markets and potentially a new all-time high close for the Dow Jones. What I want to do in today's video is recap what has happened when the Dow Jones has closed in new all-time high territory and take a look at what Bitcoin has done in those following months. This might give us a few insights to what we could expect for 2024. And don't forget, we also have an election year. 2024 is the big one. It's the election year. 2023 was the pre-election year, the year where the markets typically go up and when the masses think the markets need to collapse. So what does 2024 have in store for us? Guys, we have been in this bull market for 13 months. We're getting relatively close to the next resistance level at 48K, but you know that already. It's what we've been covering here, looking at the 50% level at $45,000. We're expecting that to be hit before the halving. That has happened. Now, at some point over the coming months, I'm looking for a correction because essentially markets can't go up forever. But corrections are healthy in markets. This is what we want to have if we're going to see a sustained bull market and for Bitcoin to reach 70K, maybe 100K, maybe 150K. I don't know exactly where it's going to hit, but if we're going to see much higher prices, then we definitely want to see Bitcoin correct and have some sort of time to recuperate after a big move. I've said that Bitcoin is not going to go back under $20,000. I think that's a ridiculous number that many are still throwing out there because they didn't reach their $10,000 or their $9,000 or their $3,000 targets. I don't think Bitcoin's going to see 20K. I don't think it's going to see 25K. And I think we'll be lucky if we see anything between $28,000 and $32,000. But with that aside, that's a bit of a banger for you guys into the first half of 2024. What we want to understand is where we go next. And we have plenty to keep our appetite wet into January, of course. The ETFs, everyone's talking about the ETFs. Meanwhile, Bitcoin is stalling. Now, there is another piece of fundamental news, some changes that are going on. Google prepares for potential Bitcoin ETFs by easing crypto ad rules. Now, is this going to allow Bitcoin to go to 100 grand tomorrow? Well, that seems pretty stupid, but maybe over the next 1, 2, 3 years, this is going to obviously help Bitcoin and the crypto space if Google continue to ease their rules on ads. Previously, they weren't allowing ads, or they just had very tight, restrictive rules around how you can advertise crypto and Bitcoin on Google. And of course, well, over 80% of the world, 90% of the world uses Google, those who are online. So if we're getting to this stage where it's getting to be eased, then potentially we'll see more of these sort of ads coming online. And then of course, more of the masses will start to see that as well. And if more of the masses are seeing that, well, they're probably going to see more about cryptocurrencies and altcoins, and we'll start to see even bigger moves for altcoins. As for the altcoin market, we're still well and truly on track with our timing. We're looking for a correction, or essentially a top and then a correction, sometime in Q1 of 2024. But in the meantime, there's been absolutely great trading gains. So congratulations to all the TIA Premium members and TIA members who are hitting up their gains here with their trades. Looking specifically at Gann swing analysis, that is looking at your TIA Gann swing indicator, which has a 7-day free trial if you want to understand how to use that indicator to get on board with some of the trades in the direction of the trend. So congratulations to you guys there, hitting 1100%, wild 200%, 34% on a nice Bitcoin long there, 192%, and so on and so forth. Lots and lots of gains here. So congratulations to you guys. That link again, right at the top here, TIA Gann swing indicator, 7-day free trial with tutorial videos on how to use that as well. But if you want to go straight to the source, TIA Premium is there for you as well. So let's have a look at some of the major signals for the stock markets as we continue on into this major bull market. So we're looking at the small caps as one of those indicators here. As for the smaller cap index, it's lower down on my priority list. However, it still has reached a new 1-year high. So this has happened many times in the past. And what we see 12 months later, 80% of the time, 79% of the time is a win. Now, the importance to this is when we see that occur. So when we see small caps move into a new 52-week high, this is typically advantageous for larger cap stocks as well. If you remember the narratives of 2023, a lot were saying that the markets had to collapse because the top 7 stocks were moving the markets. Now the top 7 stocks aren't doing the talking. You've got the bottom 500, the bottom 2,000 moving. So the narratives flips to say, well, if the bottom are moving and the top's not moving, then we have to collapse. So you can really start to put together these ridiculous news headlines where they don't really understand what they're talking about, but they're just trying to tell you what isn't happening. So in this case, over the following year, large cap index was up 83% of the time. So basically 8 out of 10 times, with a slight edge out of the 79% win rate for the small caps. So basically edging out those small caps there over this next 12 months. I'm not saying that the first half of 2024 is basically going to be straight up. It could be shaky. And I've talked about this quite a lot on the channel here. So I'm not going to dive over the top into it again. And that's why I'm looking for some sort of correction in that first quarter. Now, I'm not saying that there has to be a correction tomorrow, next week, all that sort of stuff. I'm looking in that quarter. I'm a more of a macro trader and investor here. So if you're looking at the short-term stuff, join the short-term traders here that are scooping up the gains for their trades, looking at this TIA gain swing indicator on your particular time frame on your chosen markets. But for the rest of us looking at the macro picture, 12 months later, from this point, late 2023 to late 2024, typically 8 out of 10 times, the stock markets have been up. Now, if the stock markets are up, they're going to be at even higher prices in even higher all-time high territory. Think about that for a moment. When we see these markets go into all-time high territory, this typically signals massive risk on for Bitcoin and crypto. So I'm a massive bull over the next couple of years, even though this first half of 2024 could potentially be a little bit shaky. And we've seen shaky before in these markets as we lead out of an all-time high. That's what I'm going to go through with you guys in just a moment. So that's the first piece of major news there. You've got the small caps reaching 52-week highs, and typically this is a great sign for the stock markets. Now remember the timeframes we're looking at here, 12 months. First half, maybe not so easy, but I think that last half of 2024 is also going to be pretty significant. Now, the other piece here, which a narrative could potentially form, and you'll see the recession BS again and all this sort of fearful stuff coming out, is of course the interest rates. Now, the interest rates have paused for the last couple of months. Since July, we've had another reading there 6 weeks later, something like September and then December, and we've got another one coming up here. This is for the US. Now, the fear here is that if the interest rates roll over, then the market is also going to roll over. And people typically point to the past and say, this happened every single time, which is absolute garbage. You have roughly 40-year cycles in interest rates. Now, you can take this data back hundreds of years, and it typically lasts sort of 30 to 40 years up, 30 to 40 years down. Unfortunately, we don't have all of that data here in TradingView. But we can look back to the 80s. And I typically take these things back as far as the data will allow me, and I've gone back in previous videos and also shown you that as well. Maybe you've seen those videos. But nonetheless, you can have a look for yourself, take my word, or go and do the research. We have seen the 80s down into the 2000s. There's roughly your 30, 35 years. Now, we started to head back up in the mid-teens, so the mid-2010s, and now we're really starting to see it push a little higher. However, this is pretty much where interest rates have been over the last 30 odd years. This could be the start of the next 30 to 40 year cycle to the upside. We'll leave all of the thoughts and the questions for another video because yes, I understand that does bring on a lot of thoughts and more questions saying, how can anyone ever afford this? How can properties continue up, etc., etc. Now, we've covered that before, but I'll touch on that in future videos. For now, we just want to have a look at these interest rates and the potential of the narrative shifting and spooking the masses to think that the markets are going to fall again. All I want to direct your attention to is markets rising. You can see here in the 90s, and this is what I typically reference back if I don't show you charts. You can see interest rates rose and the markets went up. Interest rates rising, markets going up, interest rates rising, markets going up. Remember when we saw interest rates rising, everyone said, well, markets falling, typically markets always fall if interest rates go up because no one can afford anything. Again, it was proven absolutely incorrect because pretty much people just look back to one cycle, maybe a year or so. So we also had interest rates falling and falling and falling. You can see from 1995 to 1999, that's 4 years of interest rates pausing and falling, yet the market continued up. Sure, it was the tech boom. Nonetheless, the interest rates went up. Now, interest rates also went up when the market started to fall. Then they went down and the market was still falling. Then they paused and went up and the market went up. So all I'm saying here is interest rates can pause, go up, go down, and the market will do what it wants to do. The main thing is, where are we in the cycle? We are in the final stage of the 18.6-year real estate cycle, which essentially means these markets are going to go ballistic over the next couple of years, which is a symptom of a major collapse that will form after this point. Well, basically will come into effect after this ridiculous bull market, this everything bull market that we are in. So that's my update for the interest rates, because I suspect that narrative is going to be a big thing for 2024. Maybe we pause, maybe we come down a little bit. Everyone's going to expect the market to come down. And maybe that's our first 6 months of 2024, and that's all we can think about. So that's our next big piece there. We need to get on to what's going on for the Dow Jones, as it potentially is going to close at a new all-time high price on the monthly chart. This could be one of the most massive and significant events for 2023. The Dow Jones closing it in all-time high territory. So what has happened in the past when the Dow Jones has closed at all-time high territories to Bitcoin? What happens next with Bitcoin? So let's take it back to the previous cycle. There are a couple of things to look at here. We can see the Dow Jones in all-time high territory here, closing in all-time high territory on November 2019. It then collapsed and we had the pandemic low. For Bitcoin, it was a higher low, but for the stock markets, it was a lower low. Then the market went up pretty fast. We had a nice V-shaped recovery, and this is pretty much the point there at November 2020, when it then closed above that top of February 2020, and then went on to that new all-time high. Bitcoin also had a new all-time high at this point here, November 2020. So 12 months later was the Bitcoin peak. And then the previous cycle to that, we had a new all-time high monthly close in 2016, July 2016. If you remember your history, July 2016 was the halving event. There is July 2016. A few months later, then we had the breakout in November of 2016. So a few months later, we had November 2016, and then the significant breakout of these tops. This was a closing above the tops. We had a few months down, and then the market wanted to react from that point and basically go ballistic into a new all-time high. So I'm going to measure from the first close and then also this November period, November 2016, because that was essentially the time of the election. Trump got in, markets flew from that point as well. So we can see it was 17 months from the first time it closed a new all-time high territory, and then it was 13 months from that November point in 2016. Let's take a look back to the previous cycle as well. Now this one is a little bit scarier in terms of a time frame, but I want to direct your attention to some other time frames further back. You can see the top here in December 2013. So that was the BTC top back here. That's your top there for Bitcoin. Here is your top here now for the Dow Jones. 9 months earlier was when Dow Jones closed in new all-time high territory. But remember, this was after the global financial crisis, and the market had to take a little longer to recuperate to then break into new all-time high territories. So if we look back to the point where the market pretty much had its first significant sell-off, you could say that 2010 was also a significant sell-off, but in 2011 we had a very significant sell-off, and by very significant we can measure that range was roughly 19%. So nearly a bear market when you look at the 20% rule. From those levels and then the breakout and close above those tops, that gives you 22 months. So that's looking a little bit healthier from that point. Now, Bitcoin did put in a higher low from there. So there's the Bitcoin low in roughly October 2010. Then you had the higher low for BTC. So that's at this point here after that significant 90% sell-off. break into new all-time high for the Dow Jones and for Bitcoin, and then that top happened a few months later. From where we currently sit, we can see that there are several numbers here. We've got the 12 months, but if we take it back to this period here where it just broke out of the tops before COVID, well, we can bring it back and we can see it's roughly 24 to 25 months. Now, to the previous cycle, we only have a 17-month reading there. But for this first cycle, you can go all the way back to roughly about 22 months. Bitcoin top, the breakout of this significant top before the collapse. And of course, this was under the all-time high, but we had the GFC, which is absolutely crazy big event. So if we start to measure out now those timeframes, we had 24, 25, we had a 17, and we had a 22. So somewhere in that sort of mid-ish 20-month period or that 17-month, where we can start to look at if this is a all-time high close here for the Dow Jones. Let's go out 17 months, and this could potentially be that Bitcoin all-time high. May 2025. May 2025. I have not talked about a top for Bitcoin in May 2025. It is relatively early in the cycle, but when it comes to our analysis, looking back in the past to forecast the future, we want to keep some of these options open. So there's May 2025. Now let's look at 22 months through to 25 months. There's your 22 months at October 2025. Definitely a time frame that we've been looking at. 24 is at December, and 25 months is actually January 2026. So pretty close to the end of 2025 there. So really the standout one to me here is May of 2025. So to keep our minds open that potentially we see that top slightly earlier. However, even if that is the case, even if we saw a May 2025 case, the total time from the low to May, there we are, May 2025 is still 30 months. So we're still on the left-hand side of the 4-year cycle. So 4-year cycle is roughly 48 months. That is measured low to low. This is not the halving cycle. This is not any of these other 4-year weird cycles that people talk about. This is the Hurst cycle. Low to low is what the measure is. If you peak on the second half of the 4 years, you've got a right-hand translated cycle, which is still a bullish signal. If it's on the left-hand cycle, it means the top came early, which means the momentum is running out relatively soon. So it's a bad thing to get a top early. So with either event, it's still happening in 2025, and it's still going to be on that stronger side. One is just earlier, and I like to come up with things that maybe I haven't thought of before to measure out some of these timeframes, because maybe it catches everyone by surprise and we get a May top or a mid-year top rather than an end-of-year top. So I'm going to keep both of these on my own watch list to remind us of what might come in the future, but nonetheless, it seems like 2025 is more likely that time frame. Now you can see the time frames did come out in that later half of 2025, so there's more pressure there than there is in the mid of the year. So I'm not treating them equally. I'm treating the end of the year as more likely, and the mid-year something to keep a lookout for. We've covered a lot of ground in today's video, looking at 3 huge signals for the stock markets in 2024 and potentially how Bitcoin reacts to these major events. We have the small caps for the stock markets breaking into fresh 1-year highs and what this means for the stock market. I've covered interest rates here, looking at potential 40-year cycles of the interest rates going up and then back down. And then, of course, as cycles do, potentially continue up. And what I think narratives might start to pop up in 2024 is we're always hearing about some other ridiculous narrative. And then I've also gone through the Dow Jones monthly close here, because this could be the first time since the pandemic that we've seen a new higher monthly close, or a new all-time higher monthly close, which is very, very significant to risk on markets. There is one other major thing I wanted to get through, but I'm going to leave that for another video. And of course, get you to like and subscribe so you can join us back here for this other piece of information. You got enough to digest in this one here, and enough gold to go and check out in the video description with 7-day free trial for the TIA Gain Swing Indicator. You can join our TIA members, smashing up their profits here, or you can join us back here on the channel for another macro cycle analysis video. Thanks once again, guys. I'll see you back here real soon. Hope you had a fantastic Christmas and having a great holiday if you are taking some time off. Until then, take care and peace out.